Well, hello and welcome to PM Express. And the issue on the table for discussion today, Ghana's debt stock hit 150 billion Ghana cedis. And in the last, from February, 9 billion has been added onto the debt stock. The two sides of the story, those who think the debt is spiraling out of control, and those who think the economy is big enough to absorb the debt. And so that's the issue on the table. The other issue on the table is that, since the days of Chairman Rawlings, since the days of Achampong, everyone assumes government and say, oh, the other guy is borrowing too much, so I'm going to come in and try and stabilize things. He borrows too much until the next person comes, he was borrowing too much. And that's been the song that everybody sings. Indeed, the MPP came into power saying that Mahama and his government were borrowing too much. And here we are. Nadu and Co are also borrowing. I'm sure they'll go, and who knows who come next, and the borrowing continues. Is that politics or is it economics? Is that the reality? What is it, so that the layman will really understand that, listen, this is our only hope. We just borrow till thy kingdom come. Or is there ever going to be a day when we sort of stabilize things and balance our budget? I don't know, maybe that being an idealist, but until you balance your budget, is that the name of the game? Just borrow to run affairs? But here we are, 154 billion and still borrowing. My name is Nana Sakwa, the fourth chief of the Little Republic of Akwemo, Edumasan. When I come back, I have a few people to speak to who understand economics, and they will educate us. Don't go. Thank you very much for staying. Ghana's debt stock hit 150 billion. With me in studio is Courage Kwesibuti, who's an economic analyst, no stranger to the show. Courage, you're welcome.
Thank you, Nana.
And joining us via Skype is Dr. Lord Mensah, Senior Lecturer, University of Ghana Business School. Doc, you're welcome.
Yeah, thank you, Nana.
Very good. I can hear you loud and clear. And then later in the show, Professor John Gachi would also join us. So within this short hour, we'll have an in-depth as to whether we can handle the spate with which the debt is rising or not. So my first question, let me come to you on Skype. Let me break the convention and come to you on Skype. Dr. Mensah, can the country handle the spate at which the debt is rising?
Oh, yes. Nana, if you ask me, I would say we can. Because as a country, we can't grow out our own internal generation, or possibly things we generate on our own. Looking at the rate at which our population is growing, there is an infrastructure and that calls for external borrowing or cost external borrowing, for which obviously the government has the market to borrow. So if you ask me, I would tell you that yes, as a country, if you look at all the resources you have, including what do we call it, human resource capacity, we should be able to contain this debt that is growing. We used to find our debt somewhere 70% our GDP above. Then, as a result of some financial discipline over the past few years, we've been able to bring it to somewhere 3.7% of our GDP. Now, in another direction, it tells you that hey, possibly our economy is expanding, or we are being disciplined in terms of our borrowing. But I can tell you that the economy is expanding. That is why that ratio is reducing. And we're hoping that as we borrow, we can convert that into assets within the country. We get worried on our debt because normally we don't really see the asset aspect of the debt that we've incurred over the years. Then I can tell you that we have enough capacity to contain the debt. As a country, we can't go all by ourselves. Even in business, take Ghana as a corporate entity. You should know that Ghana be in business, and be in business, you cannot go out of your own IGF. Therefore, you will need external funding, and external funding means that it has to be put to good use. That is why possibly in your introduction you mentioned that government upon government has been borrowing over the years, and are we going to continue to borrow? There's nothing wrong with borrowing. If you take the so-called G8, the biggest economies in the world, none of them has their debt to GDP ratio being less than 80%. Do they get worried? No, they don't get worried because they have assets to show for this debt. And if you have an asset to show for your debt, I mean, you don't have a cause to worry at all. The debt will pay for itself. So as a country, we're not supposed to get worried. I've seen a threshold of 70 being quoted for Ghana. I don't think the 70 is dreaded, a margin or dreaded threshold that we can get to, that we should get worried. Now, it depends on our economic output. If we are able to generate more as an economy, we can go as far as we can. We have countries where that debt GDP ratio is about 200%, but they are still, ranked as a top economy in the world. So for me, I don't think we have cause to worry. We can contain the debt as a country.
Courage. I think the reason why the layman would be worried was when this government was coming in. I mean, there was a lot of noise that, look, the previous government is borrowing too much, debt to GDP, debt to GDP. So we all panicked that, hey, we're going to crash. We're going to crash. So let's hand over the economy to those who can manage it. And so those who can manage it comes in and start borrowing and say, oh, don't worry, borrowing is good. And then you want to, so it's unfortunate that it's become political economics, but for the layman, the only reason why we panic about borrowing is because we've been told borrowing is no good. And then now we are told, oh, don't worry, we can borrow is fine. So, I mean, which is which?
Okay, to be fair, well, you have a big point in there that the politics of it is what is muddying the waters. I mean, sorry, a very good evening to our listeners. But the substantive issue really hasn't been about how much we're borrowing, like Dr. Lord Mensah is saying. It's not about how much we're borrowing. It's about what we're doing and what we're borrowing. Really, that is what matters. Every nation, like companies and every other thing, they get money from the profits they make in any given year and raise money from other sources for investment. And then so you expect that those investments will yield return. As a country, you don't have the option of listing stocks because it's not something that can work. So your option is issuing debts to raise money, plus the revenues you raise from internally. And of course, for a country like ours where we are not so developed, support funds from our donor partners and stuff like that. Those are really our sources of fund. So if your revenue is not up there, you need to get a difference. And the difference that you are borrowing shouldn't be monies you are borrowing to pay salaries, shouldn't be monies you are borrowing to take care of burial services of people, or do all those funny stuff that people do with money or governments do with money in the past. But monies that are being allocated to strategic assets that not only would give jobs to people, but expand the size of the economy over time. So debt, 154 billion, it doesn't really mean anything if you look at the indicators of debt sustainability, a debt to GDP ratio. You were saying there are countries where debt to GDP ratio close to 200%. US almighty is above 100% and all of that. But it's not an issue. The reason it's not an issue is that if that debt is going to, so debt to GDP, the base is GDP. Debts that you are acquiring, which are going to strategic assets, are supposed to be expanding your GDP. And then so if that is really what you are doing with debt, it's not a bother. I mean, IMF is not concerned because you are growing the size of your economy. If you look at it really, 2018, government is projecting that the economy will grow by, to some 241 billion at the end of 2018. So we ended 2017 with a debt stock of 142.5 billion. 142.5 billion. Today, we are told 154, even though that official data is not out yet. Probably some insider info from the sources that are publishing it, but that data will be out next week, Friday. Now, 154 billion, if you look at the growth rate, it's about 8% from beginning of the year. I mean, last year, the growth in our debt stock was some 16%. Given that, you see, there is planting for food and job program that is time-bound. Agriculture is season-bound. The rain starts and you need to finance some of these things. So it is normal that if revenues year after year doesn't normally perform in the first half of the year, government front load expenditure on some of those things that are time bound. You don't wait when SHS free SHS bills fall due, you say you've not raised enough revenue. So you need to find money to finance those things. It's the reason probably you could understand why they would go into the market and borrow so much, to be able to front load some of those expenditures in the first half of the year. But traditionally, borrowing levels are supposed to go down. And the growth in debt stock is a product of so many factors. It's not only how much you borrow, but the stability of your currency, because components of your debt is denominated in the foreign currency. So if the CD has depreciated, even on the official market, by I think some 5.7% year to date. I mean, if on the unofficial market, the Forex Bureau, we're doing around some 5% depreciation year to date, then you want to say that the foreign component of your debt has grown by some 5%, even without you borrowing anything in addition. That is one. Then the size of what we call the primary balance you're running. Primary balance is really how much revenue you are able to generate as against the expenditures you make minus interest payment. So if you are running a primary surplus, which means that your expenditure is less than the revenues you have generated, that difference can go into paying down some of your debt, right? But if you are running a primary deficit, then you are adding to the debt stock because you need even more money to undertake the planned expenditures you have in your budget. And then so if I'm looking at the debt stock in terms of how it's going to grow, I'm looking at those fundamentals. What is happening to currency? What is happening to the primary balance you're running? And one major thing that determines the extent of growth in your debt is the difference between your real interest rate and then the growth rate, domestic growth rate, as in the GDP growth rate. So if that difference is positive, it tells you that your debt is going to grow. If that difference is negative, it tells you the debt is going to go down. Let's take a case in point. Last year, we're told that the average weighted interest on all of Ghana's total public debt is, I think, some 17.4%. And then we ended last year with inflation of 11.8%. So that difference is actually your real interest rate. If you negate the growth rate of 8.5%, you are in negative, right? So that means that if you are running your economy that way, you should be reducing or slowing the pace of growth in the debt stock. And then those fundamentals are what I look at. And I look at the monies we are borrowing now. What are they going into? Are they being used to purchase luxury cars for people and all? Those information is not available to us. So growth in debt stock, yes, it can be a concern if we know the monies are not being used profitably. And then we know what the government is doing really underground with the fundamentals.
You've mentioned countries that have got like high percentage their debt to GDP ratios. You mentioned America, doctor said 200% for a particular country. You know, those countries also lend money. America prints dollars. So
but we also print cedis.
Oh, but but you don't trade in cedis. So you don't want to flood your market with cedis because then you'll be stuck with it. So it makes it puts us at a disadvantage where we cannot owe that percentage as compared to these countries because they are loaning out money.
Of course, I agree. I think I said on this show last time.
And then this primary balance business, we are running at a negative primary balance.
No, interestingly, last year we did a primary surplus of, I think, 0.6 or 5%, one of the two, I think 0.6%.
But this year, as of now,
this year,
we are running at an 8 billion deficit. GRA is saying that, look, there are 8 billion.
So those are different things. Revenue deficit is about 8% as at the information I have as at end of May. The mid-year review, which comes somewhere next week, will tell us the picture as at half year. I'm not aware of the 8 billion you mentioned, but I know of 8% shortfall in revenue. That is not equivalent to primary deficit. Primary deficit, we are interested in the end year figure intermittently, and like I said, there are some expenditures that fall due that if you don't honor, I mean, it will affect your default rating and all of that. There are some expenditures you can postpone, and I made a mention of a program like Planting for Food to Job. It's season bound. We don't have irrigation systems. So if you need to supply seed, fertilizers for people to farm, you don't wait till you raise the revenue. So you find money to finance those projects in the interim, waiting for the improvement in revenues, right? So those are some of the things, and so I'm aware that there's been some front loading of expenditure in the first half year. It explains why there is such growth. But I'm trying to say that if we had 16% growth in the debt to GDP ratio last year, the debt stock last year, 16.6 or so percent growth, and then so far up to May we've done 8%, and given that we say we agree there's a front loading of expenditure, all other things being equal, borrowing is expected to slow down to some extent in the second half year. So the question should be, we scrutinizing the use of those funds rather than the amount being borrowed, because the amount is irrelevant if we know the use they are put to good use.
Well, Doc,
Nana,
I think we beg to differ on the amount being irrelevant because we have to pay it back. You know, we have to pay it back, and that's all they tell us. Oh, we are putting it to good use, good use. And, you know, the average Joe wakes up and is looking for a job. The city is all over the place. Fuel keeps going up and down. And so it's a matter for concern. It's not one of those things we can just sit and say, oh, yeah, the experts are handling it. Because when we go out there, we don't feel it.
yes, you are right. You will not feel it immediately. And when you borrow, as a country, depends on where you place money or where you place fund. That will determine whether people feel it immediately or it will take some time before they feel it. Now, in this country, normally we borrow for infrastructural development. We borrow for government to lay some platform for the private sector to build on it. So that one will not kind of mitigate, effect that you have on your borrowing as to how you invest. Now, but then if anything at all, we should get worried of, I would say that we should relate our debt level to our export. Because the export is what will generate the debt. The export is what will generate the debt component that we're supposed to get worried on. Like my brother is talking about exchange rate, and then possibly you've not borrowed, but then the rate at which your city is depreciating tells me that you need to pay more. In that case, then we have to relate our debt to export. That is what will generate dollar for us. The export that will generate dollar for us. So if we borrow, we have to invest in businesses that will generate, more dollars for us. For instance, if we borrow to renovate possibly the port, right? The port will lead us to have something good in terms of our export. Therefore, should be able to, use our debt component that is foreign. In that case, you can have a direct impact. But then, if you borrow and you are invested in infrastructure, if you borrow and you are investing in things that would lay the foundation, but that would give a platform the private sector to leverage on, I don't think that you will have that feeling of borrowing in your pocket. Of course, no government can borrow and then come and share the money on the street for Kenyans to enjoy. It depends on where you place the fund. If the fund is placed readily into investment that is socially oriented, then obviously we'll feel it in our home immediately. For instance, if the government was to borrow to fund KSHS, obviously individual homes, feels the impact easily. But if government borrows and they invest in roads, okay, until maybe the farmer sitting somewhere can expand his farm, or a factory sitting somewhere at Bordier or village say, can have access to the town to bring their goods that will come for the profit that they make them to expand. There's no way individuals will feel that in their pocket. And if government borrows to invest in health facilities, obviously you will not feel that immediately in your pocket. But in essence, going far, you're going to have healthy labor force. So therefore, we expect that when a private man is looking out for labor, obviously they're going to have labor force that is strong. Then the government can benefit from that from taxes here and there. So the benefit depends on where the fund is. If you want the feel it directly, that means you have to borrow and then come and distribute the money on the street. And that is not the essence of the borrowing. And if you go to the market with that purpose to borrow, nobody will lend you money as a country. So I believe that it depends on the things that we've invested the money in. And the impact might not necessarily be immediate. Now, we are talking about our debt stock to GDP reducing over the years. I can tell you that sometimes the GDP growth that we're experiencing now, it might not necessarily be as a result of the current administration or, So it could be that some of the investment that we did earlier, that is put up into our growth currently. So therefore, if you relate our debt to GDP, it has that trajectory of reducing. The impact might not necessarily be felt immediately. Then we going forward, I think Ghanaians will realize the essence of increment in debt.
Let me go to the phones. I have Professor John Gatti joining us on the phone, a senior lecturer and economist at University of Cape Coast. Prof, you're welcome. Hello, Prof.
Hello.
Good evening and welcome.
Good evening. Thank you for having me.
Thank you. Thank you. It's been a while that we had a conversation.
Exactly so.
Yeah, Prof, Ghana's debt stock hit 154 billion, and they're saying from February till now, it went up by another 9 billion. And I'm speaking from the ordinary man on the street thinking, it's going up too fast. I have two economists who say, don't panic, the country can handle it. I know you're also an economist, so what's your position on the rising debt stock?
Well, definitely, nobody is happy that our debt stock is rising at the rate that we are observing when the Bank of Ghana makes announcement on the debt stock. Definitely, we have concern because when you borrow, there is a need to engage that fund, especially in public infrastructure investment that will actually protect the economy and provide space for further growth. But the problem we are facing is that it is not convincing when it comes to what the debt is being used for. Of course, when you read the debt management section of the Public Financial Management Act, it is very clear what the public borrowing should be directed to. One is to finance the deficit, and the other one is to engage in the restructuring of debt. We have been told about the issue of debt reprofiling. Those are the key things that have been mentioned. But I believe as a country, our borrowing, to a large extent, should be directed to key and strategic infrastructure for the country. And if that is not what is being done, then the high level of borrowing is not actually being directed very well, and we have concerns about that.
Prof. Gachi, let me stay with you. As a nation, we don't have enough revenue, you know, to balance our budget. So is the reality not that you continue to borrow because we are told that a great percentage of the money we make goes into salaries, and then another greater portion goes into paying interest on monies that we borrowed already. So there's only a small margin to build roads and schools and everything. So realistically, are we just stuck in this borrowing frenzy?
We are not stuck. It's because we are not willing to actually solve the problem. If I'm not mistaken, over the past 10 years, we keep on saying that our revenue is only enough to pay for remuneration and nothing is left for capital expenditure. What is the solution? What have we put in place in order to change that course? We have not done anything. What we keep on doing is to increase the expenditure stream. That is what we are very good at. And we have forgotten that 10 years ago, the revenue was only enough to cater for remuneration. So all the new expenditure streams that we are creating, how do we expect to deal with them? How are we growing our economy? Over the past 15 years, it is on record that our economy, the growth of our economy, is largely about the natural resource sector. And that growth is not inclusive and it's not generating the kind of jobs that are needed for people to engage in to increase their contribution to revenue. This growth is not able to contribute hugely to revenue generation for the country. This growth is not able to put forward or to generate or create the kind of opportunity needed for our people to engage in, to provide jobs, and at the same time allow these people to contribute to revenue. We have not done so much about this issue, but our appetite is to increase the expenditure stream. So it is not as if we should be lamenting about these problems. It is because we are not willing to find solutions to what we all know is the bane of our economic management.
And Prof, let me hold you there, and then I'll come to studio. And in studio, I have Courage Botti, who's also an economic analyst. You know, what Prof Gaji is saying that, look, we haven't changed the modus operandi too much, and so the borrowing should be a matter for concern.
Well, you see, borrowing. Is that the only way for Ghana? I don't think so. There are several ways, and I get worried about this anytime it comes up. Look at it this way, Nana. We are told, you see, you only borrow to finance things you don't have money for, isn't it? Mm-hmm. We are told that today there are about 6 million potential taxpayers in Ghana. Out of that 6 million, only 1.5 million is paying tax. So a tax revenue of around 40 billion that is expected, or I think some 35 or so billion that is expected this year. It's expected to be paid by some companies and some 1.5 million Ghanaians. What happens to the remaining? Is it 3.5? I mean, no one is answering. Why? And there are strict laws on how to get those people who are defaulting tax to pay, get them in prison, I mean, and all of that when you find them. Why are we not focusing energy on finding those? And I hear it's coming up that there are some new tax measures. It's in the media. Your organization is also putting some out there that the VAT is going to be increased to 20% and all of that. And you see, that is a consumption tax that is going to target the few that they can identify again to try to raise revenue. You see, the solution to avoiding borrowing is to raise more revenue. The revenues are not being raised, and then a lot of people are escaping the tax net.
Catch the same old people.
To catch the same old people, bedding the same old people and all of that. And in the end, it will not be effective, it will not be efficient and all of that, and you don't raise much because the few people are bedding, and businesses will not do so well because the tax bedding will be too heavy upon them. And so I think the way to sustainably move out of this debt trap is really to have a second look at how to get people into the tax net. I hear things like TIN number, registration stuff are going on. I hear things on property rate stuff, discussions are going on and all of that. But we all agree that raising taxes is a lazy alternative to plug in the revenue loophole. But government upon government found solace in raising taxes. The way to go is, for me, get the few people that can, pay the taxes, start paying. Those monies will be invested. That reduces your borrowing. And again, the conversation should shift, in my view, from how much we are borrowing to holding public officials accountable for how they use those monies. It is not out of place for you to haul, say, finance minister or now his deputy, who is directly in charge of borrowing, to ask him, interrogate him on the uses of. We just came out of a 2 billion euro bond. Right on the heels of that, we did a 5-year issuance. Last month, I think we did a 3-year bond. Previously, we've done so much, all in a short space. We should hold them accountable. What are these monies going into? You see, the whole discussion is centering around the use of the funds and inclusive growth. I agree. It's the oil sector and to some extent the other natural resources that are growing our economy to the level we're seeing. Even though I think last year and I think even the year before, the non-oil sector, I think did averagely, 5% growth, which is quite commendable. But that growth is not inclusive. We need to bring the non-oil economy up. That requires the investment of those funds. But if a single contract can be worth so much, when private people do it, it's so less, but government does it, it's so much, the misuse of the funds are the problems. That is what we should be holding our public officials to. The point I was making about 154 billion being irrelevant is really this, that 154 is just a figure. Debt to GDP ratio now puts it at 63.9. That is not unsustainable. And then I think for a middle income country of our stature, we should be striving around 65% debt to GDP ratio. So quite cool. But what are we using those monies for? That is where the conversation for me should shift to. If we can go to the bottom of that and get public officials accountable for the monies they are raising or issuing on our behalf, then the economy will be growing going forward. Then we can expand and rely less on borrowing. But borrowing, every country borrows. And I don't think the only way out for Ghana is borrow, borrow, borrow. You can't borrow your way out of debt. There needs to be a plan behind the borrowing. What is that plan? That is what we should be interrogating, in my view.
Professor Gachi.
Hello?
Hello, Prof.
Yes.
That was courage submission. There's, rumors in the air that, some taxes are going to be going up. Could this be some of the things to plug some of the holes so that we can pay some of our debts?
Well, I think we are getting the whole thing wrong. It is true that if there is opportunity to bring on board new taxes that are fair to the system, we can do that. But the point is that the way forward? Taxing the same people all the time. At one point, the government says that, look, I'm moving from taxation to production. And we are not seeing the effect of that. And you are coming back to the same taxation. Inconsistencies in terms of fiscal policy management doesn't help anybody.
Do you think they were hasty in removing the quote unquote nuisance taxes?
Well, I think we all do know that before you remove taxes or reduce taxes, you must look at your economic strategy. I think at the same time that we say that we are reducing taxes and removing some, US did the same thing. As soon as they did it within 2 days, businesses know the effect of those taxes on their activities, and they can project and they could announce publicly what they will be doing in terms of investing into the economy. Actually, when we did all these things, what was the result? Correct, the result is that we are going back to taxation. So I think that we are just doing things without looking at the overall effect, especially the medium to long term. But the point again is, see, when we are talking about GDP growth, it is not only about the figure. it's about the effect of that GDP growth. GDP growth carries with it opportunities. And it is these opportunities that will create business. It is these opportunities that will engage new people. And those new people will be paying income tax. They will be consuming. These new opportunities will create new business, and those new businesses will be paying taxes. But if we allow this type of growth to continue, and we come back to the people all the time to collect the little that they have that is left with them, after paying all of that, I believe that we are not willing to solve the problem of the country, and will continue to go within this cycle of demonizing taxes at one point, then at another point embracing it. So that is what is actually happening.
Professor Gachi, hold on for me. Let me go to Dr. Lord Mensah and get Dr. Lord Mensah is now on the phone. Doc, I also want your views on this nuisance taxes, which were taken off. Were they taken off hastily? Because, you know, it was explained to us that once you take it off, the businesses are able to expand, and therefore you get your taxes at the back end instead of the front end. What's your position on this?
And we need to understand that, you see, before you reduce taxes, you need to know very well that the nation is going to lose money when it comes to reduction of taxes. It affects revenue generation here and there. So it has an impact on the economy. And then on the inside, it's a deferment of your revenue, where you give the tax holiday, and in the end, businesses are thinking about, you know, where they can invest these taxes in their businesses for it to create jobs. But it depends on where you tax when it comes to these taxes. Before you reduce taxes, you need to look at the sensitive part of it, where it can have impact, and in the end, the economy will benefit from it. Other than that, it will turn around for you to come back to tell Ghanaians that you would like to increase taxes here and there. But like my friend Courage is saying in the studio, we should know that we still have some underground economies which, you know, we've not been able to open up in terms of capturing them into the tax net. And that is what we need to invest in. I mean, I'm waiting for a government that will come and say that, hey, look, I'm going to borrow to put up structures, to put up systems that can help me to, you know, generate revenue, that can help me to unravel this underground economy to the extent that we will be able to generate that, you know, percentage that is being found down there that they are not paying taxes. I'm waiting for a government of that sort, because to expand your tax net in itself is an investment. We need to understand that, where we have to think about, you know, investing in this area. Now, we had an earlier investment that goes into, you know, digital addressing system. One of the purpose was to ensure that we capture people or businesses at every location in the country. Now, Nana, have we been able to integrate this, you know, this GPS system into our revenue collection for the past, I think, 1 year that it has come to play? As it stands now, that investment has been a standalone investment. It has not been integrated very well. So, in effect, it tells you that the end product or the benefit of that, you know, investment is quite, you know, on the minimal side, or we've not realized it yet. So, if you ask me, we still have people on the ground in terms of revenue generation through taxes. But then what are we doing as a country? We need to invest in that. We can even borrow for that purpose. And trust me, anybody that you go on the market to tell him that you still have some quantum of revenue stuck somewhere that you want to get them into your tax net, therefore you want to invest, the person will be prepared to lend you money. So to me, I think the taxes in itself, we can reduce it, but we have to be careful. We need to do an analysis to get to know the benefit that will come with the reduction. So, like I said, if you reduce taxes, it's a deferment of the benefit. Either you want it immediate through tax, or you defer it for it to have impact on the economy, and then in the long run, you reap it in multiples. That is when businesses have been able to reinvest their taxes That is, if you are able to reduce taxes to a level where it will touch the business, then the business can what? Easily, expand with that tax holiday, and in the end, they are going to employ. When the business expand and they employ people, you can tax the people as well.
Doctor.
So in the end, we need to understand the dynamics critically. Look at whether we need the money now, or we can, defer it, and in the end, we reap it when, purposefully we are able to give those holidays.
Dr. Mensah.
Then we expect in this budget review that some, either taxes will be increased or new taxes will be introduced. And I can tell you that it's as a result of some of the holidays we gave, the benefit was not realized. So that is why we are going back to where we were.
Good. That's exactly my question to Courage. Courage, did that plan fail? That cutting of nuisance taxes did not work as much as they expected it to?
While I think it will be a hasty conclusion to say it failed, I think there have been some challenges. And then let's look at these things critically. I'm reluctant to speak on them because it's this information, like, it's not out there. We are all waiting to see what new tax measures that are put out there. But I doubt they are taxes on production. They will be largely consumption taxes. I mean, on a hindsight, or like on a foresight or something. I think it's more like a consumption tax than production tax. That said, you see, if you are implementing this policy with the focus of shifting focus from consumption to production, and then trying to make the environment conducive for people to invest and all of that, you do the cost-benefit analysis. I think we are told, if I remember correctly, that the finance minister said in 2017 the money we lost out of the tax cuts was equivalent to some 1 billion cedis. That's a lot of money for our economy, yes. But what is the impact of that money? Is it an investment for the future? You see, when you are giving incentives to businesses to increase productivity, it is not an outcome that will happen instantaneously. Its effect is lagged. It comes over time. I think one of the, I'm not sure who said it, tried to say that. I think it's Dr. Mensah, that some of the growth we are seeing today may be as a result of the borrowings that happened in the past. Same way, it takes time for a businessman to dissect the impact of a tax cut, take the required investment decisions, make the needed investment to take advantage of that tax cut, and then it translating into growth and ultimately revenue for the government at the back end. Now, 1.5 years, is it enough to realize that benefit? I don't have the answer, but I think it's maybe too short. The effect may come over time. But in doing so, government pretty well know the needs of this country before proposing those things and then actually carrying them out. So what was the plan to plug the interim shortfall in revenue? Was there any plan in place?
Let me take a quick break and then I'll come back.
That's fine.
And then find out, was it just fulfilling manifesto promise, or was there any strategy actually in place? Don't go. Well, we're looking at Ghana's debt stock, and as I said, if you were following the show, that sometimes we the laymen panic because those who assume power always tell us that, hey, they are borrowing too much, they're borrowing too much, and so we give them the mandate that, oh well, in that case you take over, and then they start borrowing, then we panic, and then we give it to somebody else. So I just got economists in the house to try and help us. Courage was in mid-flight, and I stopped him. I have Professor Gachi and Dr. Mensah on phone, but in studio is Courage Buti. Courage, was it just a populist decision that probably went bad?
I wouldn't say so. Probably the stopgap measures were not well calculated in my view, because in principle, it's not bad to try to incentivize for a growing economy.
Because of timing, I'll be rationing between the
that's
three of you.
fine. But for a growing economy, if you ask of the other ones, the other economies that rose through, had the same challenges rose through, you realize that they all find a way, or even till Dubai finds a way of making their place a business hub for people to go there and do big investment with juicy tax incentives. So if you want to incentivize businesses to grow, it is not a bad thing in principle. But then, in the interim, while that result is not being achieved, that growth, which will lead to revenue, is not being achieved, what was the plan to plug the revenue gap?
Let me go to...
That is what I think was not properly arranged.
Professor Agachi. Hello, Professor Agachi.
Yes.
Would you say this elimination of nuisance taxes was a populist decision, something to satisfy their manifesto, and it went bad? What would your position be?
Well, I think we can't stay away from this. It is true. It was part of manifesto promise. And the government itself indicated that they have made promises that people they needed to give them. Of course, the way the entire program was implemented was not properly done. It's like government didn't actually listen to what is just happening in industry. If you read the successive barometer report by AGI, they categorize the things which were of priority to them or which were actually affecting them. The first one is access to credit. So if you reduce what you are calling nuisance tax, you have not reduced their corporate tax, etc. But the rate at which they are taking loans is so huge, there is not going to be any opportunity to have the effect of reduction in so-called nuisance taxes, as opposed to what happened in the U.S. When the announcement was made within a week, businesses were able to speak to the issue. So I believe that it was not well implemented. Proper studies was not done before some of these issues were put into policy framework and announced to the people of Ghana. I think that is the bane of the entire program.
Prof, thank you very much for that. Thank you so much. Let me go to Dr. Lord Mensah. Doc, the same question to you. What's your position? You think it was a populist decision that didn't, reap the results?
I think that decision was more politically driven than economic, drive. Because if you look at it carefully, the areas that were being taxed in terms of given these taxes, what can we save out of that? What is the possibility of its impact on the economy? I don't think it would have been that much, felt. Because if you look at something like Anaposokai, those taxes that were, taken off. For instance, if you put this across, you get to know that tax impact on the economy is very, very minimal. And possibly that might not necessarily be a driver of prices of spare parts on the market, because it could be that it's not the taxes that drives those prices. There are other things that drive those prices that needs to be looked into. That is exchange rate. So that wasn't well thought through, like I said, and it was more of a political driven than economic drive. And also, if you look at the local airline taxes that was given out, free tax that was given out, you get to know that how many people can fly this, local airline. It has had some impact on, the number of people. But most of the people, in this country, fly, transit from one place to the other through road. So I don't think that will have impact on this economy that much.
Dr. Mensah,
so I would
say
that it was more of political driven than economic drive.
Thank you very much. Courage, let me end with you. Going forward, what do you propose?
Just a quick one on that last point he made. You see, I think impact analysis will bring out some of these things. But I am aware, and I've seen some data that suggests that air travel, internal air travel, actually grew by some percentage points, since the introduction of this. As to whether it's attributed to the reduction in taxes, we need to do the impact.
But did they reduce their fares?
To some extent,
So
fuel, stuff like that. And so the way forward for me, I think, apart from borrowing and all of that, the sustainable way to reduce borrowing, I have said before, is to find way of including a lot of people in the tax net, one, and then prudent, so that we can run sustainably a primary surplus. I think the IMF said that if we could run a primary surplus of 2% of GDP for the next 3 years, we do not need to slow down the pace of borrowing to attain debt sustainability. And by debt sustainability, we're talking of, for our category, about 65% debt to GDP ratio annually, 2% primary surplus. Last year we did, I think, 0.6%. This year it's I've forgotten the figure, but it's projected to even be a little higher. And then going forward, if we put that fiscal cap of 5% like they are being proposed, and we put a cap on debt to GDP ratio as being proposed in the new fiscal law that is in Parliament, and those things are adhered to strictly, we could be reducing our debt without necessarily cutting down on how much we borrow. Fiscal prudence is key.
Thank you so much, Courage Boti. Thank you, Dr. Lord Mensah. Thank you, Professor John Gachi. And thank you at home for watching. We'll be back to do this all over again. The number I always give you is 024-366-2001. 024-366-2001. And that's Tanti's Fashion. They've given me my shirt for the show. We're back to do this again. Thank you.